Hey guys, Dave Keller here with Market Misbehavior. Wanted to share with you a chart of a particular group, Homebuilders, which overall have been doing very, very well. A number of stocks that have had nice bounces in recent week, particularly today, which were up. Lennar Homes up about 4 to 5%, about 4.7% today, at a time when the market was not up nearly as much. And so the question is, why is this an interesting setup? And it's all about relative strengths. We're going to talk about the price characteristics, but more importantly, about relative strength and the importance of leaning into stocks that are working. So here is my focus on relative strength for home builders. So relative strength is one of the most important parts of my technical toolkit. It is based on the concept that you want to own stocks that are working and not own stocks that are not working, which sounds kind of intuitive. And to be honest with you, it very much is. It is a very intuitive way to focus on price momentum and make sure that your portfolio, the stocks you own, do better than other stocks that are out there. Before we get to the charts, just want to remind you, if this sort of thinking about charting, technical analysis, investor behavior, psychology, sentiment, decision-making routines, if all of that is of interest to you, I hope you'll consider subscribing to my channel. I'd love to have you along for this journey. Also, give me a like on the video below and put a comment below. What do you think about home builders here, especially in the coming 3 to 6 months with the increased potential spending in infrastructure? Are home builders setting up for a nice stretch of outperformance? Let's get to the charts. All right, so we're going to start with a chart of Lennar Corp, LEN. This is one of the popular home builders, other similar ones that you may know of, KB Homes, Toll Brothers, DR Horton. These are all sort of in that similar group of home builders. So basically, the chart of Lennar is pretty solid. And the reason why it's so impressive is for a couple of reasons. Number one, you can see how the stock has run from its March 2020 low up to the peak in October of 2020 in a consolidation phase in the fourth quarter and then rallying higher. So at this point, it's making a clear pattern of higher highs and higher lows. And that's pretty good. That's kind of what you want. That's what Charles Dow 100 plus years ago said is the definition of an uptrend, a chart making higher highs and higher lows. That's what we've seen here. What's interesting is if you think about the chart of the S&P 500 in your mind, it looks similar, but actually noticeably different. Both of them bottomed out in March of 2020. Both of them rallied into June and then further on into September. But what happened since then is the S&P actually broke out in November, and all of a sudden the end of the year was pretty strong, and that continued into the new year. Home builders, however, struggled a little bit in the fourth quarter, and you can see how the relative strength at the bottom increased from March to October as Lennar outperformed the S&P, went down in the fourth quarter as it underperformed the S&P, and then went back higher, and is now making a new 12-month relative high in the last week. This line at the bottom is arguably one of the most important parts of my toolkit. It's called relative strength. It shows you the relative performance of the stock versus the benchmark. So here we're looking at the ratio of LEN versus the SPY. When this line's going up, the stock's outperforming. When it goes down, it's underperforming. And so overall, the idea is you want to own names or bet on charts where the price, the relative strength line is going up, because that tells you it's doing better than the overall market environment. So here we have a chart, Lennar, where the price is making new 52-week highs, where the relative strength line is making new 52-week highs. That's overall very, very positive. Now, the challenge with buying one particular company like Lennar, I've always told individual investors, you're making a commitment, right? You are agreeing to understand the company and understand the risk, the company-specific risk, which means you need to have an awareness of what's happening with Lennar's business, what they're doing, because things like earnings and management changes and new products and all of that can certainly affect the performance of that individual stock. So instead of buying an individual name, a lot of people will, as an alternative, buy a home builder ETF. There are two popular ones that a lot of people go to. Number one is ITB, which is the home construction ETF from iShares, and the other one is XHB, which is the S&P Home Builder ETF. Both of them are very similar, and if you look at either chart, you'll see that the price is in an uptrend. You can see that the relative strength line is improving. Here it is for XHB. You can see on ITB, same thing. You can see that it's broken out to the upside. You see the relative strength is improving, so that's all good. If you look back at the last 12 months, the S&P 500 is up around 60% from March of 2020, 1 year ago today. We're we're recording this on March 25th, so about a year ago to today, it's about 60% up. These two home builder ETFs are up about double that, so about 115 to 120% return over the same period. That's why the relative strength lines have gone up over the last year, and that's why these groups overall have been pretty good bets, because on a relative basis, you've essentially doubled your return since the bottom in March of 2020, buying home builders as opposed to just owning the S&P 500. Now, why aren't they identical? Why aren't they both the exact same? Well, this goes into what is made up, or what is comprises these ETFs. I always tell people, when you're looking at an ETF, make sure you dig underneath, open up the hood, look underneath, and see what's actually happening, what comprises these. Now, with these two ETFs, they're similar, but they're a little different. ITB, which is the iShares ETF, is about 60% home builders, and then about 40% a bunch of other things. And it's things that are related to home builders, stuff like Masco, which makes building materials, Sherwin-Williams, which makes paint, Home Depot and Lowe's, where you get the home improvement retail. These are all part of these ETFs, because it's sort of really a home improvement ETF. But 60% of the ITB is home builders, things like Lennar and DR Horton. If we go to the XHB, it's a little different. This one's only about 30% home builders, and 70% a bunch of other things. Those things like building materials, home improvement retail. Do you know what the number one stock, the biggest weight in the XHB is? It's Williams Sonoma. It's basically a home goods store where you might buy things to put in your home, not necessarily to improve your home. So a lot of times when you think home builders and you look for a home builder ETF and you find something like the XHB, remember, just the title of the ETF is not enough. I would always dig a little deeper and understand what exposure you're getting. And I put that along the same lines of things like expenses and the assets under management, the spread, the buy-sell spread, and all that. That helps you understand what bet you are making when you get into an ETF. But with both of them, you are getting exposure to a broad group of stocks overall, which have done very well. And that you can tell that, again, visually, by the fact that the relative strength lines are going higher. So we're looking at a home builder like Lennar or one of these home builder ETFs. The fact that the relative strength line is going up, why is that so important? So in my time as an institutional investor working at a large buy-side firm, we focused a lot of our attention on that relative strength line, because as an active manager, as an institutional manager, if you own stocks where that relative strength line is going up, you are doing your job by outperforming a passive benchmark, outperforming the index. So looking at stocks relative to their benchmarks, relative to their sectors, and other things, looking at stocks relative to one another can be a really important way that you understand if you're in the right assets at the right time. I'll share one story with you. John Roque, who's a longtime technical analyst, I consider him a mentor and a friend. He was at a sell-side firm called Texas Schroeder, and then went and has worked at a couple of buy-side firms, hedge funds as well. But he came up to Boston, where I was at the time, and at a meeting, he shared with his story. He said, all right, if you're the Boston Red Sox, you're the manager of the Red Sox, you want to beat the New York Yankees, what are you going to do? Are you going to put your kind of okay, pretty good players on the field and see if they can beat the Yankees? Like, no, you're going to put your best players that have the best batting averages, best defensive players, best pitchers. You're going to put them on the field, because that gets you the best opportunity, the best likelihood to beat the New York Yankees. So with our investment portfolios, why would we do any different, right? If we want to outperform the benchmark, outperform the market, are we going to put our pretty good players, or things that have an okay chance of doing well, or are we going to put the stocks that have demonstrated an ability to outperform, ability to do well? That's why stocks like Lennar with improving relative strength, ETFs like the XHB and the ITB, where the relative strength lines are improving, prices that are going up, making higher highs and higher lows. Those are the characteristics of good, strong momentum stocks with a strong likelihood of continuing to do well. So that is our look at home builders, Lennar and others, and some of the home builder ETFs, what exposure they give you, and then particularly the benefits, the importance of using relative strength in your process. Okay, so that is my video on the home builder space, the home builder ETFs, ITB and XHB, and particularly the value of using relative strength on a group like this and focusing on stocks and groups and themes where the relative strength line is improving, because it shows you that you are outperforming and definitely putting your best players on the field, giving yourself the best opportunity to outperform. If this sort of thinking about charting, visualization, investor sentiment, psychology, routines, decision-making, investor behavior, that sort of thing is of interest to you, I hope you'll hit subscribe join me on my channel. I'd love to have you along this journey. Also, give me a like for the video. I appreciate your feedback. Also, in the comment section below, tell me what you think about home builders for the next 3 to 6 months. Is it setting up pretty well in your perspective, or are you seeing something differently? From everyone here at Market Misbehavior, I'm Dave Keller. Be safe. We'll talk to you again soon.